If you stop by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. Hey guys, if you want to keep up with me when I'm not on the airwaves of YouTube, do me a big favor. Get down in that description box and click on that Richard Fain Millionaire Mentor Instagram link and give me a follow on Instagram and then send me a DM to let me know that you're rocking with me. I certainly would appreciate that. Like I said, it's that link down in the description box, probably like halfway down. You'll see the Instagram link. Go ahead and click on that for me and give me a follow. I certainly would appreciate that. Guys, we got a lot to cover. My goodness. Yesterday, whew, what a day in the stock market. I mean, goodness gracious. And according to some reports, that ain't it yet. We got at least, I'm going to walk you through someone who is well respected in the stock market world has gone on record and said we can have as much as a 10% pullback in the month of September. So kind of just getting started. And you guys know I'm really heavily invested into Nvidia. So certainly that's a stock that I'm going to talk about for a lot in a long time to come, because I have a vested interest in this company doing well since I have a lot of money invested in it. So I will cover that on the channel, but we got other stuff we're going to cover too. We're going to talk about a bunch, but we are going to talk about the overall stock market. We're going to talk about Nvidia, and then we're going to talk about a couple other stocks as well. Again, I've went on record and told y'all I'm pulling back on stocks, but I'm going to go ahead and cover them on my YouTube channel because that's what's the hot topic. I'm not going to be buying a lot of individual stocks going forward because I got enough. But I am going to be covering it for those of you that want to hear my perspective on what's going on in the market, right? And again, it's just my perspective, my opinion, because I'm not an expert. I'm just a regular guy on here that definitely don't have any, I don't have any experience on Wall Street. I can't compete with the Wall Street traders. I'm just a regular guy here that buys investments and I hold them long term until they mature. That's the guy I am. But I like to give my opinion on what's happening in our current stock market, what's happening in our economy, what's happening with interest rates. All of that stuff I like to give my opinion on because, hey man, it's an opinion channel. That's what I do, right? So here we go. Let's start off with a couple of things that I got to get out the way because y'all know I got a business to run. And of course, the only way I'm able to get on here and do what I do is because I have a business. And you guys support that business, so I appreciate that. And www.richardfain.net is my website. That's part of my business. And in that website, I got 10 big boy blue chip paper, asset-driven, digital products, right? Real estate-driven digital products. Get your mindset right, driven digital products. How to start a business, how to grow a business, how to start an online business. All that stuff is on the website, guys. So if you want to collapse time frames and get some information that gives you step-by-step, then go check out the website and consider making an investment in yourself and grabbing one of those wonderful digital products. Everything from how to invest in the stock market all the way up to investing in real estate with little or no money down, credit repair, mindset, how to manage money better, how to start a business online, how to grow a regular bit, scale a bit, all that's on there. So if you want information quickly at your fingertips, that's relatively inexpensive, it's information that's step-by-step hey, go to the website. Second link down in the description box, www.richardfain.net. While you're there, consider joining the Wealth Builders. That's my financial community on Patreon, fastest growing financial community on Patreon. We got over 1,000+ wealth builders. Over 1,000, guys. Matter of fact, we're getting close to 1,100. So we got over 1,000 wealth builders in 4.5 months. That's it. And we are having a good time over there helping each other. Of course, right now with the stock market being volatile, with interest rates being high, it's a lot going on, but we're having a discussion about it, a healthy discussion. We're not having a discussion from fear, right? We're having a discussion from strength, not weakness, strength, not fear, but confidence. That's what we're doing over on the Wealth Builders. So if you want to be a part of that, get yourself over there. Get to the website, click on the membership button, click on the join button, and come join us. We'd love to have you. We got room for you. We'd love to hear your opinion on what's going on. Now, over there, we're wealth builders. So we have a certain thing that we do, which is traditional investing, buy and hold, big boy blue chip, long term. That's the strategy in that financial community. It's not a strategy of day trading or Forex trading or crypto pump and dump trading. No, that's not what we do over there. That's not the right one for you if that's what you're looking to do. Over there, we're traditional investors, buy and hold, big boy blue chip, long term. So if you want to be a part of that to build wealth, come join us. Like I said, second link down in the description box. Last thing I want to talk about real quick for the business is, before I get into the meat and potatoes, is Moo. Guys, Moo is the self-directed brokerage app that I'm going to be using over the next 10 years to 10x my net worth. The good folks at Moo, in partnership with me, or in an affiliate partnership with me. I have an affiliate link, which is the first link down in the description box, right? Every time somebody signs up for Moo, I get a small little cha-ching, which is nice. But of course, I use the app, right? I've been using it since January 2024, and it's been great. I love it. It's a good self-directed brokerage app, right? I've used several self-directed brokerage apps, and I like this one better than any one that I've used in the past. So for me, it's an opportunity for you to be able to do some investing on your own and get yourself up to 15 free stocks when you try out their new brokerage app. That's right, guys. They're going to give you up to 15 free stocks of publicly traded companies. All you got to do is go down to the description box and click on the Moo link. Open up your Moo account today. When you deposit $100 in your Moo account, they're going to give you 5 free stocks. When you deposit $1,000 in your Moo account, they're going to give you 15 free stocks, guys, publicly traded companies. So before you do anything other than just make your deposit, you will get 5 free stocks or 15 free stocks of publicly traded companies. Who knows what those stocks could be? Could be hyperscalers like Amazon, Microsoft, Meta, Tesla, Alphabet, Nvidia. Could be mega caps. It could be other semiconductors like AMD. It could be Broad. I don't know. It's a random pick, right? Or it could be outside of the tech industry, outside of the semiconductor industry, and it may be the 10 other industries. Could be some retail giants like a Walmart or a CV. It could be any of those companies you could get free shares of. Guys, I don't know. It's a random process. But what I do know is if you put $100 in there, they're going to give you 5 free stocks of publicly traded companies. If you put $1,000 in there, they're going to give you 15 free stocks of publicly traded companies. That's it. They trade on the New York Stock Exchange or the Chicago Stock Exchange or the like. Could be NASDAQ companies, could be Dow companies, could be S&P 500 companies. I don't know. But what you do know is you're going to get 5 free ones. If you put $100 in, you're going to get 15 free stocks if you put $1,000. So get down in the description box, click on the Moo link, come join me and start using Moo to do what? Put yourself in a position where you can buy some big boy blue chip paper assets and get to your wealth. There's no guarantees, but hey man, one guarantee I can give you is you're going to get them 15 free stocks if you put $1,000 in. That I can guarantee you. You're going to get 5 free stocks if you put $100 in. That I can guarantee you. I can't guarantee you nothing else that I'm going to say today is going to come true. But that will come true. I can guarantee you that. That's right. And for those of you that open the Moo account and are not familiar with how to use these brokerage apps, send me an email through my website, www.richardfain.net. Send me an email. It's the second link down in the description box for the website. Send me an email and let me know you've opened the Moo account, you funded it, and you want to get the tutorial videos to walk you through how to use the app. And I'll send you those tutorial videos. You can also request my wealth transfer blueprint 1.0 and 2.0, where I outline all the big boy blue chip investments that I'm gonna be buying over the next 10 years to get myself to a 10X on my net worth. I'll send you that as well, just so that you know what I'm doing, just in case you wanna copy it. Now, I'm not a financial advisor, and I don't play one on YouTube. I'm not one in real life. I don't have a Series 7. I don't have a Series 6. I don't have a CFP. I've never worked on Wall Street. I don't know really nothing about Wall Street, but I do know companies. So when I pick investments based on companies. I don't pick it based on the stock. I pick it based on companies, right? I pick companies, and I pick ETFs that has companies in them. That's what I pick. So do me a big favor. If you want that information, just send me the email once you open your Moomoo account. Well, all right, guys, let's dive into this thing, because I ain't gonna keep you long. I'm gonna keep you at about 12 o'clock for those of you that want to hang around, right? We're gonna hang in here till about 12 o'clock. But let's tackle the headline. What's the headline for the video? Nvidia stock to drop to 75 bucks a share by a certain date. Yeah, we're gonna talk about that. There are some folks out there that believe this stock is going to continue to drop. None of us know. We don't have a crystal ball. We can only go by what we read and decide what we believe, right? We can only decide what we believe, but some folk believe this stock could drop down to $75 a share. I'm not in that camp, but there are people that are in that camp, and could it happen? Yeah. Remember, guys, less than a month ago, it was at $90 a share. Less than a month ago. So there's a possibility that Nvidia could drop down that low at some point over the next, several weeks. We'll have to see. And we're going to talk about that. But let's start off with this. Let's start off with the trading volume yesterday. Let's start there. Let's start with the Nvidia trading volume for September 3rd. Let's look at the numbers. Let's see how catastrophic yesterday was. Right? First trading day in September. Historically, September has not been our friend. The trend on September has not been our friend. The trend hasn't been our friend in September the last 4 years, guys. If you go look at the last 4 years in September and you look at the broader stock market, it sold off to the tune of about an average of 5% a year, with the high point being like 9% 1 year, the low point being about 4%. So you're talking about an average of 5 or 6% sell-off in the month of September over the last 4 years. So what has the fifth year, which is 2024, started off? Not that good. It hadn't started off good, right? So here's the trading volume. Here's what we did yesterday in Nvidia. Stock price opened on Tuesday at $116.01. That was what it opened at. The high for the stock price on Tuesday was $116.21. That was the high. The low for the stock yesterday was $107.29. It closed at 108. And you had trading volume, guys. Check this out. You had trading volume of about 475 million in trading volume. 475 million. What does that tell you now? Pay attention. I'm not an expert, guys, but just listen to me and you come up with your own conclusion. 475 million in trading volume. What does that tell me? When the stock price is dropping and you have 475 million in trading volume, what does that tell you about what's happening with the stock? Somebody's selling it. Someone is selling a lot of Nvidia stock. You had 475 million in volume, but the stock price was dropping. What does that tell you? In my opinion, it tells me somebody out there selling a lot of Nvidia stock. Now, if we looked at the reverse and you had 475 million and the stock price was going up, what does that tell you? Somebody buying. That's why I keep telling you guys, listen, man, you can kind of figure out what's going on here, right? You had 475 million in volume, stock price tanking. That tells you somebody's selling. Who's selling? Well, you got a few, you got some retail investors panicking and parachuting out of this thing. But really what you got selling is traders, Wall Street traders. Yeah, they're dumping the stock, right? So that's where you got to go look at. You can go look at like Yahoo Finance. You can type in, hey, give me the trading volume for XYZ stock on XYZ date, and Yahoo Finance will give you all the numbers, guys. Okay, let's look at this morning. Let me do a refresh to make sure I got the right numbers here. Let's look at what's going on so far this morning. We looked at yesterday. Yesterday was a 475 million in volume. And guys, I can tell you right now, just looking at the chart, that was one of the heaviest volume days in a long time. Let me go back and tell you when volume was heavier than that. Guess when volume was heavier than that, guys? August 5th. August 5th, you had 552 million in volume on August 5th. And of course, you guys know what happened. The low for the stock price that day was $90.69. So what was happening that day with the stock? Sell-off, a dump. You had that type of volume, but that was a volume for dumping the stock. Dumping the stock, right? You had that much volume for dumping the stock. And then you had 473 on July 30, 473 million in volume, trading volume. On July 30th, you had 486 million. But now let's see what was happening. What was happening with the stock that day? Let's see here. Again, the stock was selling off. So yesterday was a sell-off. Let's see what's happening today. Right now, if we look at the current volume from today, you have your high right now. Your high for the stock price is 109.17. So you got a little bit of uptick. So now you got a little uptick. Now the stock price is moving upward slightly. We don't know where to finish at today, but right now, first thing this morning, market's been over less than an hour and a half. You see an uptick. $109.17. What was the low? 104.12. That was the low, 104.12. So here we go, man. Over 150 million in volume already. Over 150 million in volume already. What's the trend? The trend is a tick upward. Now, all of a sudden, here we go again. I'm sorry, the stock opened at 105 today. My apologies. The stock opened at 105.38 today. The high was 109.17. The low was 104.12. And that's just 1 hour of normal trading, an hour, almost an hour and a half of normal trading. This is what you got. 105.36 is where it opened. It already went up to 109.17, right? And we already have over 150 million in volume already. We already got 150 million in volume already. So I just wanted to share that with you guys to let you know when you look at the volume, you tend to know which way the volume is swinging, in my opinion, based on what the stock price is doing. So if the stock price is tanking and you got a large volume, to me, that means you got a lot of people dumping the stock. Still got volume, but it's just the other way. If you see a large volume like that and the stock is rising quickly, that means, in my opinion, someone is buying. Again, I'm not a stock expert here. I'm not an expert at all. I'm just giving you my little 2 cents. You go out and do your own research, and if I'm wrong, then I'm wrong. But it's my opinion, and if I'm wrong, okay, I already told you, go do your own research. So there you go. But that's my little 2 cents. I wanted to set the stage for what's coming, right? Can this thing get down to $75 a share by what? September 17th. That's the key, right? Can it get down to $75 a share by September 17th to do what? To do what now? See, this is where the Wall Street trader is going to come in, right? If they can drive this thing down to $75 a share, $80 a share prior to what? What's happening on September 17th and 18th? That could make them some money. Fed meeting, FOMC meeting. We can drive this thing down, and if there's good news, potentially there's a bounce on the 18th. Potentially there's a bounce. So we got 2 weeks to drive this thing down to the cellar, to the basement, and then start running it back up. Now, that may have already started today. I don't know. Remember, we got down to about 105, 106 yesterday on this stock. It may be a little lower than that in after hours. I don't know. I wasn't following it. But it got down, according to my records here on Yahoo Finance. That's my resource. So take it with a grain of salt, right? Because you know the 1%ers own Yahoo Finance. But I don't think they would manipulate these numbers. Maybe they would. I don't know. But according to yesterday's activity, September 3rd, let's see what it says. Again, the stock started out at 116. That's what it opened at. Remember, on the previous Friday, it closed at 119. So from the previous Friday, last Friday, to after the holiday, Tuesday, the stock price opened at 116. Opened at 116, but quickly started dropping. And the low again for that day was 107.29, closed at 108, and then further moved down in after hours trading. Right? So, and you had, like I said, 475 million in volume. 475 million in volume. So that just tells me a lot of people were selling that day. So it drove the stock price down to about 106, 107, 108, whatever it was. It drove it down from basically 116 where it opened all the way down to 108. Let's say that's where it closed at least according to what Yahoo Finance is saying. And it says it closed at 108.81. So basically drove the thing down by $8 a share. But today, all of a sudden, we're still in September now, but today, all of a sudden, it's starting a little bit of a march upward. Why is that? What's going on? Now, some of y'all bought the dip yesterday. Some of y'all took dip season seriously and you went shopping. Some of y'all did. Some of y'all went shopping. Now, I got to admit, I didn't go shopping because I already told you my cost per share is already under 108. So there's no sense of me buying it at 108, not me. If it had got down to $100 a share, I would have bought yesterday too. I would have went shopping, but I didn't because I already got enough shares and it wasn't cheap enough yet for me. The dip season was here, but it wasn't dipped enough for me. I wasn't gonna dip my toe in that dip pool because it wasn't low enough. I needed to get lower. But right now today, you see this thing climbing a little bit. Why is it climbing? I don't know. Maybe this was a repeat of August 5th by Wall Street traders, drove the stock down, and then from that day on, after August 5th, remember August 5th, they drove the thing down to $90 a share. It never went back there again for the rest of August. What did it do? It started its climb upward. Who caused that? Wall Street traders. Guess who is causing this, in my opinion? Wall Street traders caused yesterday. And guess what they're going to do? They're going to start slowly marching this thing back up to the catalyst. What is the catalyst? September 17th and 18th, which is Fed rate cut day. If we get tremendous news on rate cut day, stock bounces a little bit, somebody just made a lot of money. Somebody gonna make a lot of money in this thing. So they gonna keep doing this because they control the stock, right? They control the stock. Now that doesn't mean this thing don't reverse itself in an hour and go down to $75 a share. Who knows? I don't control any of that. You don't control any of that. I'm just giving you an idea of my hypothesis. My opinion is all this is orchestrated by Wall Street traders. What's the difference between yesterday and today? What happened in one day? What happened? Please, somebody tell me what happened in one day to start the march towards green again. What happened? What happened? What happened from September 3rd, when this thing started out bad, started at 116, ended the day at 108 or lower? What changed? What happened between these 2 days? What catalyst? What's causing the stock today to go up? I'm just asking. What's causing it to go up today? I don't know. I don't have the answer. All I know is I'm looking at some stuff that happened a month ago on August 5th, and it looks like the same pattern, if you ask me. Now, don't get me wrong. It didn't go as deep as it did on August 5th, but it's still a pattern. I mean, you see the same pattern. Same pattern. August 5th, take it down to the seller, and then from August 6th all the way up to August 28th, it was a propaganda campaign to drive that thing up from $90 a share to about $128 a share on August 27th. And then guess what? Let's dump on August 28th. I don't know. I'm just telling you, that's what I see. I'm seeing the same thing happening here. Again, I don't know where this thing will end up today, but I'm telling you right now, it's at 109.75. It's in the green and it's moving upward. Now, could this be a carrot they dangling? Could they be dangling a carrot in front of your face and saying, oh yeah, I know some of y'all yesterday bought the dip. Oh yeah, you got a little something, something right here. I don't know. And then all of a sudden, 2 days from now, they take the carrot back and run the thing down to $75 a share. I don't know. Y'all got to figure that out. I'm not smart enough to know that, but I'm just following patterns. I'm just following a pattern here. I'm following a pattern from last month that been carried over to this month. It's the same pattern. Run it down to the basement and then run it back up to the penthouse and do it all over again. Right? So all I'm saying is be careful out there, guys. Understand what your game plan is. If you're buying this stock or any other stock, just make sure what the game plan is. Make sure you know what you're doing If you're in the thing short term, you know what these guys are doing. If you're in it short term, they run it down to the basement, and then they run it back up, and then they dump. That's what they're doing, and they're going to continue doing that as long as they can, right? So just know that. A long-term guy like me, I could be doing that too, but I just choose not to, and I just choose to stay in the thing long term. I could easily just say, okay, here they go again. They done ran it down to 105 or 106. Let me buy. Okay, let them run it up to 120, dump it, and let them run. I could do that too, but that's not why I'm in the stock. I'm in the stock long term because I don't care about a couple $1,000s here and there. I'm long. Either I'm going to go long or I'm going to go home. That's it for me on this stock, right? So you guys do what you got to do. I thought I'd just share that with you because it seems like a nice little pattern to me, but I could be totally wrong. Maybe it's a coincidence. Maybe it's a coincidence. Maybe it's a coincidence that the stock opened at 105.38 today. Now it's 109.79. Maybe it's a coincidence that goodness gracious, it looks just like August 6th, August 5th, and then August 6th, and you look at September 3rd and you look at September 4th, goodness gracious, they look identical to me. But I don't know. Maybe I'm dead wrong. Y'all figure it out. I'm just a guy on YouTube. So let's move on. Let's move on. Let's talk a little bit about Tom Lee. Well respected on Wall Street, well respected for his opinion. He's gotten it right a lot of times. He's gotten this thing right a lot of times, right? So what is Tom Lee saying? Here's the headline. Why stocks could drop 10% over the next 8 weeks, according to a bullish forecaster who's nailed his calls this year. Stocks are facing a possible double-digit drawback in the next 8 weeks as a slew of market-moving events temporarily challenge this year's gains. Fun stats, Tom Lee told CNBC. Lee suggested that the market could fall between 7 and 10% and recommended that investors gear up for elevated turbulence. Now, Tom Lee is very well respected, guys, in this field. Very well respected. Here's what he's saying. I think investors should be cautious for the next 8 weeks. The typically bullish investor said, markets been up 7 of the 8 months this year. So we know it's an incredible strong market. But we also have the September cuts, and we have the election things that will get people nervous. What did I tell y'all yesterday? I said, listen, man, from now to after that election, it's like playing craps. If you ever played craps before. You ever played craps? Now, me, I'm from the hood, so, you know, we don't go to Las Vegas to play craps. We find us a little anywhere. I mean, we will put some dice on the ground anywhere. We don't got to go to Vegas. We just put some dice on the ground anywhere in the neighborhoods I grew up in. We just thought a dice game anywhere, right? So basically, that's what he's saying. He's saying, be careful out there. Be careful. September cuts, and we have the election, things that can get people nervous. I told you from now until after that election, anything can happen. It's just like rolling dice. Anything can happen. So be careful, guys. Make sure you got a good, solid plan that you can stick with. You don't want to be out there on rolling them dice and you ain't coming up right. So be careful. I'm just giving you a word of advice from Tom Lee. He's telling you, be careful. And I agree with him 100%. Because the markets will be nervous. Because no one knows what's going to happen. No one knows what's going to happen with this election, right? I mean, no one can predict it. Now, you can certainly go look at historical evidence. You can go back out and research past elections and what the stock market has done during past elections and all that good stuff. I'm not fit to do any of that, but you can. I'm not going down that rabbit hole, but you can go down that rabbit hole and try to figure that out. All I can tell you is be careful. The markets are unpredictable. It's a lot of volatility. When you see 475 million worth of volume on one stock and it's selling off, somebody dumping something. Now, one man's trash is another man's treasure. One man's trash is another man's treasure. So somebody went shopping yesterday during dip season. And now all of a sudden you up $4 a share. Poof, just that quick. Somebody could parachute out this thing and get them $4, $5, $10 a share and be happy. It depends on what your strategy is. That's not my strategy. My strategy is $1,000 a share. I don't know when that's going to happen, but I'm standing this thing till it do. Some people can call me a fool. That's okay. I'm all right with that. I've been called worse. In my 56 years, boy, I've been called worse. But you know, it's my money and I can do whatever I want to do with it. That's the way I look at it, right? You got to do whatever you want to do with your money. My money, I'm going to leave in this thing until it matures. So Tom Lee is warning you. Tom Lee is warning you. Very well respected on Wall Street. This gentleman is very well respected. He is telling you right now. So we know it's an incredibly strong market. The guy is saying the first 7 out of the 8 months of this year, the market has won. It's been a good market for us. We've made money. But be careful over these next couple of months. Could be a big old alligator in them weeds. Could be an alligator waiting on you. Just be careful, right? I'm in Florida, but them alligators don't mess around. You be messing around these little lakes and ponds if you want to, and you be on your little phone and ain't paying attention. One of them be done grab your leg and took you on in there. You better be careful. That's what he's saying. So here we go. That's partly a reference to the Federal Reserve's upcoming policy meeting in mid-September. I just told you guys, some people believe this thing is going to go to $75 a share before the FOMC meeting on the 17th. Will that happen? I don't know. I'm just telling you what some people say, right? I don't know. That's the date. That's the date. That's the date that we got to be careful with and not and understand what does it mean for us and our portfolios, right? That's the date I got to understand and figure out, okay, Richard, what's your thing? See, I've already told y'all yesterday what my plan is. I ain't buying no more individual stocks until this thing is over. I ain't buying no more individual stocks unless the only caveat is if Nvidia gets under $100 a share, I will. But that's it. I ain't buying nothing else until this thing is past the election. Once I get past the election, I will resume doing whatever I want to do. But I ain't smart enough to try to figure out what these Wall Street traders are going to be up into this election. I ain't smart enough for that. So I'm just going to sit it out. I'm going to buy ETFs. Dollar cost average into ETFs, and I ain't messing with no individual stocks until the election is over. Now, I'm not telling you to do that. This is just my opinion of this is what I'm doing. You do whatever you want to do. I got nothing to do with what you do. I'm telling you what I'm doing for the betterment of me and my family. I'm going to sit these individual stocks out. Unless Nvidia gets under $100 a share, I'm sitting this thing out until after the election. Because I think these guys are up to something really sneaky. They got something coming really, really sneaky. So be careful for them. I'm telling you, Tom Lee is already telling you, these next 8 weeks, be careful. This is a well-respected guy. This ain't me. This is Tom Lee. Go research him. Well-respected. Typically what this guy says, it comes true. So just be careful. So here we go. Analysts have separately indicated that the market might not welcome deeper cuts. Uh-oh, what'd he say? Let me read that again. Analysts have separately indicated that the market might not welcome deeper cuts. Bank of America wrote on Tuesday that if the Fed had to cut by 50 basis points instead, this would likely be a response to elevated recession risks. And that could backfire on us, guys. It could backfire on us. Instead of this thing going to the moon and to the top penthouse floor, it goes all the way down to the basement. Kind of the same thing that happened with Nvidia earnings on August 28th. Everybody was prepared for this thing to go to the penthouse, including me. And guess what it did? It went down to the basement. So this is what the guy is saying. Be careful. A lot of us think, okay, these rate cuts are going to stimulate the stock market, but it may not. So just be careful. That's all I'm saying. Know your strategy. Be careful. Understand what you need to accomplish and how you're going to accomplish it. Be careful. And that's what Tom Lee is saying. Analysts have separately indicated that the market might not welcome deeper cuts. Bank of America, not Richard Fain, Bank of America wrote on Tuesday that if the Fed had to cut by 50 basis points instead, this would likely be a response to elevated recession risks. Friday's jobs report will determine the Fed's decision later this month, with some on Wall Street fearing it may come in weaker than expected. But Tom Lee cited that a pullback could ensure even, let's start over. But Tom Lee cited that a pullback could ensue even if it beats forecasts as investors readjust. What is this? Okay, gotcha. But Tom Lee cited that the pullback could ensue even if it beats forecasts as investors readjust interest rate outlooks. Here's what he's saying. If it's too strong and investors worry, and so the stock market down Friday, I'd like to be buying that dip, he told the outlet. If it's too strong, they're saying if the jobs report comes in too strong, right? He's saying if it comes in too strong and investors worry, and so the stock market's down Friday, I'll be buying that dip, he told the outlet. So you don't know how this is what I'm saying, guys. We don't know how this thing really gonna go. Because, see, the market may go against what you would naturally think. The market might go against that. The report comes in on Friday. Let's say the jobs report comes in on Friday and it's weaker than expected. Let's say the experts say they want 200,000 jobs added, but it comes in 150,000 jobs added. So it comes in weaker than expected. How does the market feel about that? Who knows? These guys might sell off. They might sell up. Who knows? You just don't know what they're going to do anymore because it's not predictable anymore. When you look at what happened in Nvidia, that tells you right there, this is not predictable anymore. When you think it should go, it don't. When you think it won't go, it does. Same thing yesterday. What triggered yesterday? I have no idea. Now, some people are going to say, well, golly, we got some reports out about manufacturing that manufacturing slowed down and all this. So I don't even know what that is. But yet and still a week ago, you came out with a GDP number of 3%. GDP was 3%, but now all of a sudden the manufacturing ain't right. 2 days later, the manufacturing ain't right. But yet 2 days ago, you had GDP numbers come out at 3%. See, you don't know what's going on, guys. These guys got so much false propaganda out here, you don't know what to believe. First of all, you say, oh no, the economy is fine because GDP is up. At least that's what I heard a week ago. Oh, you look at second quarter GDP, you look at for GDP for let's go look at it. Let me see if I can find it here real quick because it's confusing, but this is where they want us at. They want us in a state of confusion. So that's why I'm telling you, if you're gonna play their game, boy, you better know what you're doing because these guys are good. They very good. Let's see if we can find GDP here. What was GDP for the second quarter of 2024? Here we go. See? Listen to me now. Check this out now. Gross domestic product which is real gross domestic product, increased at an annual rate of 3% in the second quarter of 2024. Guys, that was 1 month ago. That was 1 month ago. Second quarter ended 1 month ago. And GDP for the second quarter was 3%. Now all of a sudden you hear some reports about manufacturing's weak. That's what caused the sell-off yesterday. We have weak manufacturing. It's just weird, man. This is what I'm trying to tell you. You cannot keep up with these guys because it's just poof, anything they want to throw out there. How in the world can you have GDP doing as good as it's doing, and all of a sudden now, 2 days later, it ain't doing good? It's crazy. So just be careful out there, guys, is all I'm trying to tell you. Please be careful. Please be careful out there. I'm not a financial advisor. I'm just a guy on YouTube, but I'm just telling you, it don't make no sense. Some of this don't make no sense. It don't make any sense. It don't make any sense. So just be careful out there. Friday's job report will determine the Fed's decision later this month, with some on Wall Street fearing it may come in weaker than expected. But Tom Lee cited that a pullback could ensue even if it beats. If it's too strong and investors worry, and so the stock market's down Friday, I'd be buying the dip. This is what Tom Lee said. I'd be buying the dip. Lee has been largely on the mark with his stock market calls in 2024. Heading into the year as one of Wall Street's bullish forecasters, his optimism has been met in the form of a 18% year-to-date gain for the S&P 500 through Friday. That's why I keep telling y'all, guys, if you are someone who is trying to build wealth, in my opinion, long-term wealth, you cannot go wrong with an S&P 500 ETF, in my opinion. Because guess what? You ain't got to worry about none of this. See, when you out picking these individual stocks, man, you got to worry about exactly what these Wall Street guys are doing, man, and you out here picking these individual stocks. But see, when I'm in ETFs like the S&P, I ain't got to worry about any of this. None of it. None of it. Through all the volatility, I'm still at an 18% year-to-date ROI on my S&P 500 ETF. Through all the volatility, I'm still at over a 20% return on my information technology ETF. See, you ain't got to worry about all of this when you're in ETFs, in my opinion. Why? Because you got the expert as the ETF. That fund, whether it be Vanguard, State Street, Fidelity, whoever the rest of these people are you buying from, they're the experts. They can keep up with the Wall Street guys, the Wall Street traders. But when you out here picking these individual stocks, trying to win, trying to figure out the strategy, okay, if they bring rates down, we're going to get a bounce, and then all of a sudden rates go down, you get stock price go down. I keep telling you, man, you can't beat these guys in these individual stocks. So you better know what you're doing, because when you're in individual stocks, you got to be the expert. You got to be the Tom Lee. You got to be the Tom Lee. See, when I'm over here in ETFs, I ain't got to be Tom Lee. The fund is Tom Lee. Vanguard is Tom Lee. 9 trillion under management. They the Tom Lee. But when I'm out here trying to pick individual stocks myself, then I become Tom Lee. But I'm just not a very good Tom Lee. So it makes sense for me to know my strengths and weaknesses. My weakness is trying to be Tom Lee. I can't be Tom Lee. He got way more experience than me, and he's smarter than me. But I can go over here and get behind Vanguard, or get behind State Street, or get behind Fidelity, and guess what? I'm Gucci. They smarter than Tom Lee. They know what they're doing. So go ahead and figure out what you want to figure out, but you better figure it out, because these next 2 months, I'm telling you, you better figure out which side you want to be on. I already figured my side out. I'm going to be on the side of the ETFs. That's where I'm going to be. You go figure out where you want to be, but I'm going to be on the side with Vanguard, State Street, and Fidelity. I'm going to be on that side. I'm not going to be on this side over here where I'm trying to fight these guys for 2 months and try to figure out how to outsmart them. No, I'm not going to do it. So you do whatever you want to do. I told you what Tom Lee just said. He's an expert. Go do your homework on this guy. He's an expert. He already told you for the next 2 months, you better know what you're doing. Because what you think gonna give a bounce to the stock market may not. Even if you get good news, he's saying it may not bounce. Even if you get good news, it may not bounce. That's too much for me. I want to go enjoy myself and enjoy my life. I ain't got time to be fooling around trying to figure out what these one percenters are doing with the stock market right now. I'm gonna go ahead and let Vanguard, State Street, and Fidelity deal with them through my ETFs, right? Total stock market, S&P, and information technology. I'm gonna let them handle all that, right? And then when we get on the other side of the election, guess what December normally is? A bounce month in a lot of cases. Maybe then I get back in. Now, some of y'all gonna say, well, you got such a great opportunity to buy the dip. It is. But see, I'm already dipped out. I done bought too much dip. The problem is I'm in dip. I'm constantly buying the dip. I got a lot of dip. I just need to leave the dip alone right now unless Nvidia gets under $100 a share, then I will re-enter the dip season, the dip market. But other than that, guys, you got to understand, I've been buying the dip since April. I'm dipped out with individual stocks. Because what you think is good don't always turn out good. And it's like, well, golly, man, the best thing to do is ignore these guys and just stay in your position long term like I did before I even started down this road. Just get in your positions, good companies, watch the company. Forget what them guys doing. Just pay attention to the company. As long as the company is not having business performance issues, just stay in the thing long term. That's what I'm doing going forward. I'm not going to be worried about these guys. Now, I want to talk about it on my YouTube channel because that's what I do. But I'm also not a dummy. I'm not going to try to fight with these guys and compete with these guys. I'm just going to go ahead and buy ETFs until we get on the other side of the election. And then at that point, I'll reassess if I want to get back into some individual stocks again. But till then, I'm just going to stay in ETFs because I ain't got time to try to fight with these guys and figure out what they're going to do and how they're going to manipulate the market and all this stuff. I'd rather just stay in ETFs. Like I said, ETF, what do they got? 18% rate of return in the S&P. Through Friday, last week, 18% return. So, hey man, if you was in the S&P for all year round, who wouldn't want an 18% return on their money right now? Come on, man. That's a pretty good return on your money year to date. Even outside an election year, September is a challenging month for stocks in a non-election year. But when voters head to the polls, seasonal volatility can extend as far as mid-October. There's a silver lining. Investors can expect a relief rally once a president is chosen, he said. Lee similarly cited that the tough weeks ahead could be viewed as a buying opportunity. I think in the next 8 weeks, people can get a chance to buy. He told CNBC, I think it's good to be cautious, but just ready to buy that dip. The strategist has been one of the market's staunchest bulls. In June, he argued that could triple this decade. I guess the S&P. I don't know what he's talking about. They don't even put that in here. So there you go, man. That's Tom Lee, well-respected guy on Wall Street. Done got it right a lot of times this year. He predicted. This is the guy that predicted that I think this is the guy that predicted that the S&P would go to 5,500 points. Way back though. This was like before the year even started. He predicted that. And guess what it did? Shot right through it. Shot right through it. So this guy, I know what he's talking about. So I respect him. I like him a lot. So there you go. I've given you some volumes from yesterday on Nvidia. I've also brought in an article from Yahoo, from CNBC with Tom Lee, giving you his predictions. He's not saying it's not an opportunity for you to buy, guys. If you're built for it, go get it. He's saying it could be an opportunity for you to buy. clearly what we see today, clearly what you see today from yesterday. Now, you got a stock price right now of 108.58. Started out today at 105. So clearly, if someone bought the dip yesterday, they could be in the money right now. The problem is you don't know how long this thing will last. I mean, you could be at 108.85 today. Let's say you finished at 110 today and you're thinking, woo, we going higher this week. Boy, it'll open up on Thursday and this thing will be $85 a share. That's how it is. That's the part that I'm not going to deal with, because if you just don't know. There is no rhyme or reason when this thing goes up or when it comes down. It's just no rhyme or reason to it. So you just got to be careful, man. Just be careful out there. Now, you say to yourself, well, Richard, I'm a long-term guy. I'm going to buy this thing at 105 and keep it for 3 years. Then you're perfect, in my opinion. That's the attitude to have. But this whole thing of I'm going to buy it at 105, and I think by time September 18th comes by, it might be 125. And then I'm going to sell it. You just don't know. It could be, it may not be. It could be $85 a share on September 18th. You could be all the way up to that. It looks great. And then all of a sudden you get great news. The Fed does rate cuts and you think, oh, goodness gracious, we're going to bounce and go higher. That thing turn around and go back down the other way. You just don't know, guys, anymore. What you think is good news that could help stocks, certain industries, not all industries, certain industries, especially tech industry, sometimes it don't help them. It hurts them. Good news sometimes hurts the stock, then helps the stock, right? So there you go, man. I gave you that little 2 cents. Again, could get down to $75 a share. This is coming from several people here online. But then you got people out there saying it's going to go up to whatever. I'm not even trying to predict what this thing going to go to anymore. I just don't know. It could go down to $75 a share. It could go up to $150. Who knows? It's whatever the Wall Street traders want to do. That's basically what it is. It's whatever the Wall Street traders want to do. Whatever they want to do, that's what's going to happen to this stock, guys. I'm just giving it real to you. Whatever the Wall Street traders want to do with this stock, especially in the tech sector, anything they want to do in the tech sector with these stocks, these companies, they're going to do. There doesn't have to be no business case for it. They're just going to do whatever they want to do. I mean, you got a 3% GDP for the second quarter of 2024, but yet and still you see one little report come out, at least some report, oh, manufacturing's weak. And all of a sudden that just blows up the whole universe. Don't blow up the universe for a week. It blows up the universe for one day. And then all of a sudden the universe is back put together. Let's move the stock up until we want to blow it up the next day. It's just no rhyme or reason to it. So be careful. Could present as an opportunity for y'all that are built for this. But for you folks that ain't built for this, you better be careful. It'll drive you crazy if you ain't built for it. So let's move on. Let's move on. Here's the second headline I got for you. Nvidia rout has traders watching $100 share level amid vacuum. This is another story from Yahoo Finance. Check this one out. The sharp sell-off that wiped out record $279 billion of Nvidia Corp's market value on Tuesday has traders scouring charts for clues as to where the pain might end. For Jay Woods, chief global strategist at Freedom Capital Markets, $100 per share is a key level to watch, around the price of last month's lowest close. Nvidia shares slipped in early trading to about 106 Tuesday. That was yesterday. Of course, you know right now they're at 108.12. Got as high as, I believe, 109 something, almost 110, but retreated slightly. We don't know what the volume will be like today, but we already know an hour and a half of trading, it was about 150 million worth of volume already. So the thing is picking up. I don't know if it'll do as much volume as it did yesterday, but it's still quite a lot of volume for this early in the trading day. I don't want to see the stock make a new closing low by taking out the August low. That would really suggest that things have changed, at least in terms of the technicals, Woods said. I think it will catch a bid around 100, then trade sideways for a bit. This is coming from another expert. I don't know if it's true or not. I don't know if it's propaganda or not. Who knows? Who knows? Who knows, right? You just got to figure out, listen, that's why I'm telling you, in my opinion, you know, being long on really good companies is not a bad strategy because it allows for the investment to mature over time. And you're not in this short window where you got to make everything happen in this little short window. It increases the window for you. At least for me, it does, right? So this little short thing here that I'm gonna get in, I'm gonna get out, I'm gonna get in, I'm gonna get out, you just you gotta be on this thing, man, right? You gotta be on this thing. So this is what Jay Woods, chief global strategist at Freedom Capital, said. $100 per share is a key level to watch. Around the price of last month's lowest close, he's talking about in August. Nvidia shares slipped on Tuesday, 106, currently today, 108. Here's what he continues to say. I don't want to see the stock make a new closing low by taking out the August low. Right? That would really suggest that things have changed, at least in terms of the technicals, Woods said. I think it will catch a bid around 100, then trade sideways for a bit. The latest sell-off, with shares down 14% over 3 trading sessions, was triggered by the chip makers' earnings, which failed to live up to lofty expectations. Let's stop. Okay, so you go triple digit everything. 122% year-over-year revenue growth. 174% year-over-year operating income growth. You go 168% year-over-year net profit growth. You go 168% year-over-year earnings per share growth. But you didn't meet expectations. Okay, you say you're going to do $32.5 billion in Q3 revenue. The estimate is $31.7 billion. But you didn't meet expectations. You didn't do enough. Keep telling y'all guys it don't make any sense, right? But let's keep reading. Let's keep reading. I just love when articles say stuff like this. I just love when they say, which fail to live up to lofty expectations. How can you not live up to expectations when you go 120% of every metric? You go 120% of every metric year over year, but that's not meeting lofty expectations. That's awesome. I don't know what planet we're living on right now, but it's not a regular planet. It must be a planet controlled by Wall Street traders. We live on a planet right now that's controlled by Wall Street traders, so be careful out there. These Wall Street traders, they're aliens from another galaxy. They've taken over our planet, and I don't know what's going to happen here, guys, but they have taken over the planet. Aliens have taken over the planet, and they're called Wall Street traders. How in the world do you not exceed expectations when you do 120% of something from last year? You do better than you did last year by 120% or better, but you don't meet expectations. Guys, our planet has been taken over by aliens, and the aliens are Wall Street traders. Just letting you know. Just so if you see one and a tentacle pop out of his head, you know a Wall Street trader, he's an alien. You might want to report him to the alien police. Somebody, report him. Maybe we can get him out of here and get this thing back to normal. All right, let's keep going. Investor jitters were compounded by 2 research reports. Here we go. Here we come, guys. Here we come to the research reports. Here we go. More propaganda, right? Here we go. So investor jitters were compounded by 2 research reports published on Tuesday, which sounded notes of caution on companies spending on artificial intelligence. More bad news came after the market closed, with Bloomberg reporting that Nvidia has been sent subpoenas as part of a U.S. Justice Department antitrust probe. Please tell me which big boy blue chip company hadn't gotten that. I don't see nobody saying anything about Visa being sued 1 billion times and settling for 30 billion and 20 billion and all this. People still use the Visa card. I don't see nobody throwing away the Visa card. I mean, this ain't unusual that somebody wants to sue a giant company, especially when they're the #1 company in their space. That's not unusual. Matter of fact, some people would say that's a smart tactic by competitors. I don't know. But again, there's the propaganda. That's what caused the stock to go down, because somebody got hit. They were subpoenaed as part of a U.S. Justice Department antitrust probe. You do know that don't mean they did anything wrong because they got a subpoena, right? You do know that, right? Richard Fain, you got a subpoena. Okay, that don't mean I done anything wrong. I don't think so. Now, if they said Richard Fain got arrested and I'm in jail, okay. But goodness gracious, just because I got to get a subpoena for an antitrust case, that means I done something wrong? That means the stock price tanks? Come on, man, give me a break. Y'all know this is all propaganda. This is part of what? The effort yesterday to drive the stock down. Now, they say, now, one day later, you still got all this stuff percolating, but the stock price goes up. Wouldn't you think the stock price would continue to go down if that was a big deal? Wouldn't it? Wouldn't it continue to go down? If this is a big deal, the subpoena, what do they say here? The 2 research reports published on artificial intelligence and the compound. Listen, man, we 24 hours later, not even 24 hours later, why ain't the stock price still going down if that's such a big deal? See, that's why you know all this stuff is propaganda, man. Because if the subpoena was such a big deal, why ain't the stock price $90 a share yet? If it's such a big deal, get it down to $90 a share. Get it down to $75 a share if it's that big of a deal, so I can buy some more of it, right? Clearly, it's not that big of a deal, but this is what we do. This is what we do. The problem for Nvidia shares is that there's not much on the calendar that could provide a positive catalyst. And there won't be anything on the calendar, guys, other than the rate cuts. But you got to already know the rate cuts are already priced in. So the market ain't going to bounce. Not anything significant, because already everybody know the rate cuts happening. Everybody know the rate cuts coming. That's not going to be a surprise to the markets. No. So that's not a catalyst, really. Not for Nvidia stock, it's not. The only next potential catalyst for Nvidia stock could be what? Q3 earnings. That report won't come out till like mid-November. I think around November 20, November 21st, something like that. That's the only positive catalyst I can see for Nvidia stock between now and November, late November. What else? They already know the rate cut coming, so that's already priced into the market. That's not going to bounce the market. That's already priced in. There's nothing else out there that can drive this thing higher right now. Nothing. AKA, it'll probably stay around where it's at. Maybe a little bit of a bounce here and there, and then they'll drive it back down. A little bit of bounce, they'll drive it back down. But nothing significant will happen probably with the stock price until you get on the other side of the election. The problem for Nvidia shares is that there's not much of a calendar that could provide a positive catalyst. This is from the portfolio manager at Evercore Wealth Management. We're in a bit of a void right now. We're through with earnings, and there is a lot of economic data coming up this month. There's a lot of caution ahead of that, he said. When you're in a trading vacuum, it becomes a shoot first market. Then it becomes a shoot first market that is very short term in nature. That's exactly what's happening too. This guy knows what he's talking about. That's exactly what's happening. It's a shoot first, ask questions later. And it's short term. Now, if you're a long-term person who believes in a company and you believe I can pick this thing up at a discount, and a year from now, 2 years from now, this company could offer good returns and increase their stock price and I can make money, then yeah. But I don't know. I mean, you have to figure that out. I don't know. I'm just telling you what the experts are saying. When you're in a trading vacuum, this is what the expert is saying. When you're in a trading vacuum, it becomes a shoot first market that is very short term in nature. Nvidia's slump, which pulled global chip makers and risk assets lower, comes after a tumultuous few months for the AI market darling. Tuesday's decline was the 7th time in 2 months that the shares have dropped 6% or more. They beating this thing to, whew, they beating it up, baby. They beating it up. A measure of 30-day volatility in Nvidia shares has also hit the highest since mid-2022, according to data compiled by Bloomberg. Investors will also be looking back to last month for a sense of where shares may bottom out. In August, Nvidia sank into correction that ultimately saw the stock fall 27% from its June peak before rallying back within 5% of the record. The reasons for that slump: macroeconomic jitters combined with renewed worries about the staying power of big spending on AI are being echoed now. Now, I will say on the long-term side, that's a problem that the artificial intelligence industry will need to answer. On the long-term investor side, I'm talking about institutional investors and pension funds and billionaires who have a long-term outlook on investing. Those are the people they got to convince that artificial intelligence is here to stay and it can be profitable. Traders are never long-term. Wall Street traders are never long-term, so they don't care about any of that. All they care about is can we beat the stock down and then pump it back up and make money? That's all Wall Street traders are worried about. I'm talking about long-term investors. That's what the artificial intelligence industry has to prove to long-term investors, that, hey guys, you can put your money in us and we're going to give you a return long-term that's going to be a great return. We're going to be a good investment for you. That's what the Wall Street traders know, and they know that they don't exist right now, so they can continue to beat this thing up and do whatever they want to do. That's my little opinion. Y'all guys can come in with your own opinion. I come up with your own conclusion. That's great. But I'm just telling you, that's what I see. Concerns about the relatively small returns, concerns about the relatively small returns on the tens of billions of dollars being spent by Nvidia's biggest customers were the focus of the research reports published by JP Morgan Asset Management and BlackRock Investment Institute on Tuesday. Chairman of Market and Investment Strategy for JP Morgan wrote that broader demand from corporate customers, not just from clients like OpenAI training new AI models, is needed in the next 12 to 18 months to justify huge spending on the technology. Now, here's the thing, guys. This is what the stock market does. This is what these folks do. This is what they do. They go out and they say to themselves, hey, Google, Amazon, Microsoft, Meta, they're spending all of this money on this AI infrastructure for their cloud services, businesses, for their data centers, etc. At what point do they get a return on that CapEx investment? Now, if we're going to come into this thing, we got to know there's a return coming. It can't just be the semiconductors making all the money, but the end user ain't making no money off of the investment that they're putting into this AI infrastructure. That's basically what they're saying. And they're saying they need to prove that. We'll see if they prove it or not. Meanwhile, Gene whoever, who leads BlackRock Investment Institute, said that investor patience is needed with data center build-outs and ramping up processing capacity typically takes years, not quarters, to complete. Still, Bovin said investors should remain overweight AI stocks with the recent technology sector sell-off, implying room to rebuild holdings. Freedom Capital's Woods and Encore WM's Kirkbride also still positive on Nvidia in the long term. Woods sees no reason to panic about this week's drop, while Kirkbride said there's nothing fundamentally wrong with the company or its earnings report. Bingo, bingo, bingo. Bingo, bingo, bongo. I echo that. That's why I still got 11,200 shares. I haven't sold them yet. Could have sold them, profited, moved on, but I ain't selling them because a lot of this is propaganda. I still believe the AI industry is going to do well. Yes, it's going to take a little longer than I thought it would take, but I'm okay with that. Long as exactly what this gentleman just said right here. Exactly what this gentleman just said right here. As long as there is nothing fundamentally wrong with the company or its earnings report, he's good. Wood sees no reason to panic about this week's drop, while Kirkbride said there's nothing fundamentally wrong with the company or the company's earnings reports. See, that's the key for me. Long as there's nothing fundamentally wrong with this company or the earnings, I'm good. I'm good. I'll wait it out. I'll wait it out, man. I'm going to wait it out. We're still long-term holders. This is what these guys are saying. These are experts. This is coming from Freedom Capital, right? And this is coming from Evercore, two of their top guys. This is what two of their top guys are saying. We're still long-term holders, and we haven't heard anything to change the story, either about Nvidia or its customers and their spending plans. We'd be buyers here. That's what he said. We'd be buyers. So that's good news. Just need to know both sides of the equation. Like I told you, man, you got traders, Wall Street traders. They're short-term in nature. They eat what they kill. They don't care nothing about no long-term success of AI because they're short-term traders. They do not care about the long-term success of artificial intelligence, guys. All they care about is making money. They're going to make it on the down slope and they're going to make it on the up slope. They only want to make money. Then you got long-term investors who believe, okay, we can really get a strong return in this thing and build and follow this thing out long term and really make some good money. Then you got that set. So you got the short-term folks, you got the long-term folks. The problem is the short-term folks are controlling everything right now because the long-term folks, some of them are not convinced this thing can go long-term. So they're thinking to themselves, why would I want to pour billions and billions and billions of dollars just to sit here and do nothing and not return anything to us? So until this thing is ready to take off and really do something and we get more proof, we're going to go over here and put our money over here. And that's what you got with long-term guys. Short-term guys are going to beat this thing up as much as they can beat it up. Can you make money as a short-term guy? Yes, if you know what you're doing, you can. Right? You can. I'm not, obviously they're making money because they keep doing it. They keep doing the same old setup. Beat it down, pump it up. Beat it down, pump it up. They keep doing the same old setup, right? So nothing magical about what they're doing. They keep doing the same old setup. Same old thing. Same old bait and switch. They keep doing it. Right? So let's move on. Let's move on. Let's move on. Last one we want to talk about on Nvidia. Wall Street predicts Nvidia stock price for the next 12 months. After delivering a stellar Q2 earnings report on August 28th, Nvidia's stock experienced significant volatility, raising almost 8% of its value in the subsequent trading session. However, the latest trading session on September 2nd brought 1.5% gain, which allowed Nvidia shares to close at 119. Of course, you know what happened on September 3rd. A lot of that was gone. A lot of that was gone. But you still got people out here, guys, who believe this stock is a winner. You still got people out here that believe that. And we're going to talk about just a couple of them here real quick before we get out of here. You still got folks that believe over the next 12 months, this stock does well. You got analysts from Bank of America confirm their buy rating with a raised target price of 165. This is Bank of America, guys. This ain't some, this ain't some startup company here. This is Bank of America giving this stock price a price target of 165 over the next 12 months. This is Bank of America. Let's keep moving. Piper Sandler experts maintain their overweight or buy rating and set a 140 price target while seeing the current pullback as a buying opportunity. There's two of them. Two of them. You got Bank of America confirming their buy rating, and you got them coming in with a price target of 165 over the next 12 months. You got Piper Sandler maintaining their overweight or buy rating, coming in at a price target of 140 over the next 12 months. You got researchers at Cantor Fitzgerald also reaffirmed an overweight or buy rating with a $175 price target over the next 12 months. You got JP Morgan, largest financial institution in America. JP Morgan, largest financial institution in America, 5th largest in the world. Here's what they got to say. JP Morgan notes that Nvidia's July results beat revenue, gross margin, and earnings per share estimates despite slightly missing market expectations while keeping its overweight rating and increasing the price target from 115 to 155. I guess JP Morgan Chase a slouch too. I guess Bank of America's a slouch. JP Morgan's a slouch. Wells Fargo's a slouch too. I guess all of them are just slouches. They're just the largest financial institutions that control trillions and trillions and trillions of dollars worth of deposits. That's all. I'm going to believe some guy on YouTube who makes videos about it. I'm going to believe that guy. I'm going to believe that guy over JP Morgan Chase. JP Morgan Chase, they don't know what they're doing. I don't know. They just make billions and billions of dollars per year. That's all. They don't know what they're doing. Just make billions of dollars per year, but I'm sure you make billions too. Yep. Soybean billionaire. Let's go ahead. So JP gives it a 155 price target. Very nice, very nice, very nice. So overall, Wall Street sees Nvidia as a strong buy stock, with 39 experts recommending a buy while 4 opted for a hold. The average price target is $151.79, representing a 27.16% potential upside from the current stock price. That's over the next 12 months, ladies and gentlemen. These are from big boys, not Richard Fain, Bank of America, JP, Cantor Fitzgerald, Piper Sandler. And I guarantee if you go out and pull Wells up, you'll see Wells got a positive buy rating as well. Go pull up Citi as well. They got a positive buy rating as well. So you got all 4 major big boy banks. Go pull up Goldman Sachs. Positive buy rating as well. Yes, sir. Yes, they do. Yes, they do. So what does that mean? That means a guy like me gonna be patient. I'm gonna be patient. I'm not gonna try to outfox the fox. I can't outfox the fox, AKA the aliens, AKA Wall Street traders. Can't outfox them, so why try? I'm just gonna keep my 11,200 shares and I'm gonna be patient. I'm gonna play the wait game and I'm gonna redirect all of my earnings into ETFs while I play the wait game. So I'm not gonna get caught up in this trap buying all these individual stocks trying to beat Wall Street traders when you can't. I'm done with that. They proved that in August. I tried to beat the Wall Street traders in August and wasn't successful. I said to myself, goodness gracious, this thing gotta go up when you go triple digit everything. No, it don't. Don't have to go up when you go triple digit everything, because what makes sense don't really make sense. So I learned my lesson. I said, okay, if you can't beat them, Richard, just keep what you got and go to something that can beat them, which is your ETFs. Because they're not going to outfox Vanguard. I can promise you that. They're not going to outmaneuver State Street. They're not going to outmaneuver Fidelity. I guarantee you that, baby. They're not going to outmaneuver. They're going to outfox them. They'll outfox me, but they won't outfox those guys. Because why? Those guys are not investing in one stock. See, in that total stock market index fund that I buy on the Vanguard side, they're in about 3,400 companies. Small cap, mid cap, large cap. 3,400 companies. See, when I go invest in that S&P 500, we're in 500 different companies through 11 sectors. Can't outfox that. And then when I go buy my information technology, I'm in the top 324 information technology companies in America. Can't outfox that. But when I'm out here trying to pick individual stocks on my own, they got me. Because nothing that makes sense makes sense. They don't care. They do not care if you got great earnings. What does that mean? Nothing to them. They will create something to drive the stock price down anyways, and that's what they did. So guess what? I'm going to redirect and pivot back to ETFs. I'm going to keep my current stocks. I'm going to talk about stocks every day because it's my YouTube channel and that's what I do. Y'all already know I'm no expert. I'm just a guy on YouTube, right? Giving his opinion, right? I just give y'all my opinion. So you do with that opinion what you will. But all right, guys, I appreciate you, man. I'm a bounce. I told y'all I was going to get y'all out of here at 12 o'clock and I'm going to get you out of here. Do me a big favor, get down in the description box and click on that Moomoo link. Open up your Moomoo account today, get you up to 15 free stocks. Put $100 in your Moomoo account, you get 5 free stocks. Put $1,000 in your Moomoo account, you get 15 free stocks. Now, those stocks could be any publicly traded stocks, guys. It could be Magnificent Seven. It could be, Ford. It could be CVS. It could be Lowe's. It could be Home Depot. It could be Walmart. It could be United Healthcare. It could be any of our great companies in America in those up to 15 free stocks. I don't know which we're going to get. But the good folks at Moomoo have a random process to pick those stocks and give them to you. The good news is what I can guarantee you, you put $100 in there, you're going to get 5 free stocks. You put $1,000 in that new Moomoo brokerage account, you're going to get 15 free stocks. That's a guarantee. That's a guarantee. So all you got to do if you want to take advantage of that superb offer and get yourself a really great self-directed brokerage app, get down in the description box and click on that Moomoo link. Don't delay, act today. Now, for the folks that do want to take advantage of that opportunity, but don't know how to use the brokerage app, send me an email through my website, www.richardfain.net. Second link down in the description box. Send me an email. Hey, Richard, I opened my Moomoo account. I funded it. Could you please send me the tutorial videos so that I can learn how to use this Moomoo app so I can be ready to go to make a difference in my financial life here real soon? And I'll send you those tutorial videos. Collapse time frames, get you the education you need to use the app, and all you got to do then is just go hunting. It's hunting season. It's dip season. So you may you go hunting, right? It's dip season. My recommendation, go down and hunt you some ETFs out. Leave this individual stock thing alone. You got your free individual stocks from Moomoo. You got those, keep them, sell them, flip them into ETFs. That's up to you. I'm not your financial advisor. I can't tell you what to do, but I already gave you what's out there waiting on you if you want to be an individual stock picker. It's a lot of wolves out there, a lot of aliens, and they got big guns. So you better have some type of one of them things that protect you from alien guns. They ain't really regular bullets. They tase you. They hit you with a piece of light, can cut you in half. So you better have your vest on or something to protect you from that if you're out here individual stock buying. Richard Fain, I ain't got to worry about that because I'm going to be over here picking ETFs and I'm protected. I'm behind a laser-proof glass. See, I'm protected in my ETFs. I'm behind a laser-proof glass. You over here trying to buy individual stocks, you ain't protected. Them aliens going to get you, I'm telling you. Boy, them aliens don't mess around. So you better watch out for them aliens, a.k.a. Wall Street traders. Watch out for them. I ain't messing with them no more. I'm going to take my butt back over here and get protected in these ETFs. So do me a big favor. Get down in the description box. Click on the Moomoo link. Get yourself up to 15 free stocks. Do not miss this opportunity to get you some net worth. Get you some up to 15 publicly traded company stocks, guys. So don't miss that opportunity. Also, guys, get over to the website. Check out the website, www.richardfain.net. Second link down in the description box. Got 10 fantastic big boy blue chip digital products. Everything from, how to get your credit score higher, how to repair credit, all the way up to investing in real estate with little to no money down. Step-by-step process. We got stuff in there for stock market beginners, tells you about index funds and ETFs. We got something in there that talks about DRIP, which is where you reinvest your dividends, your dividend reinvest program. That's DRIP. We talk about that. That's a good step through. If you want to start an online business, it gives you step by step what you need to do to start an online business. All of that stuff's on the website, guys, right? All of it's on the website. Go check it out. Last thing, make sure when you get to the website, you check out the membership button or the join button for the Wealth Builders, fastest growing financial community on Patreon. I started that community about 4.5 months ago, and we already have almost 1,100 folks on that platform. All wealth builders going in the same direction. We are traditional investors, buy and hold, big boy blue chip, long term. That is our discussion over there. And that's what the wealth builders, that's what our creed is when it comes to building wealth. We don't care if you build wealth other ways, But on that community, that's what we talk about. We're not going to talk about no other alternative ways of building wealth over there. If you want to do that, you got to go start your own community and you can knock yourself out. But in that community, we're going to talk about traditional investing, buy and hold, big boy blue chip, long term. If you want to be a part of that and learn how to trust yourself, have another 1,000 people wrapped around you, encouraging you, not being the expert, not trying to tell you what to do. But remember, when you got 1,000 people on a community, guys, in 4 months, all of these people have different levels of investment experience. All of these people are buying ETFs and individual stocks and index funds and mutual funds. And so they're all, so the likelihood of you coming over there saying, hey guys, you know anything about this? And somebody jumping in and saying, yeah, I got experience in that. Here's my experience. Here's what I uncovered. See, that's how you grow. That's how you collapse time frames and grow. So that's what we offer over on the private mentorship club through the Wealth Builders. So if you want to be a part of the Wealth Builders, go down to the second link in the description box, click on the website link, which is Richard Fain Millionaire Mentor website link, and then go find the membership button or the join button and come join the Wealth Builders. We're growing like crazy, man, because people understand the power of community. People understand the power of community, especially when it's a positive community. And I make sure of that because I'm in there every single day. Like I told you, ever seen one of them bald eagles? Yeah. You ever seen them, how they be looking down 5,000 feet, swoop down and get a little rabbit and take it on to the nest? That's me. I'm looking every day just like a mama bald eagle. So I ain't finna have nothing crazy go over there. We ain't trying to upsell you nothing. We ain't doing none of that over there. It's just complete community. Loving on each other financially and helping one another. We not gonna be in no, it ain't no, oh, we dump on, no, we ain't doing none of that. It's gonna be a positive environment for you. And if it ain't, DM me. Come straight to me. If you got a problem with what's going on in there, you're not satisfied with it, come to me. DM me and let's have a discussion and I'll make you whole. If you ain't happy, I'll make you whole. Got no problem with that. If you're not happy in the private mentorship club and it's not doing, and you're participating now, I don't need you coming over there being a wallflower and then emailing me saying, hey, what do I do? No, you got to participate. And if you feel like your participation or what you're getting out of it ain't right, I'll make you whole. I'm okay with that. Well, all right, guys, appreciate y'all, man. Y'all have a rest of a good Wednesday. Watch out for them aliens. Watch out for those aliens. Please watch out for them aliens. Protect yourself. Make sure you revisit your financial game plan. Make sure you're not trying to be the expert, right? Hopefully you don't have a whole portfolio full of you trying to be the expert. Some of y'all might do that, and it's your financial freedom. Go do it. But I would ask you to please consider what we just talked about today. I'm not an expert here. I'm not a financial advisor. I can't tell you what to do. I can only offer my opinion, and I've offered it. Whether you accept it or reject it, that's on you, right? So I'll see you guys tomorrow on, what's tomorrow? Thursday? Thursday. I'll have a little video this afternoon, a little market wrap-up video this afternoon for some of y'all that like the shorter videos. But for those of y'all that like the live streams and that type of thing, I'll see y'all tomorrow at 10:30 a.m. Eastern time. But until then, stay strong, stay long. Do me a big favor, lock it in with a thumbs up. Thoughts become things. See it in your mind, hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm gonna catch you guys on the next one. Peace out.